Welcome back everybody to yet another video. Now, I know it's been a while, 85 days in fact, so I apologise for that. Now, I'm not gonna lie, I missed you all. I love making these videos, I love reading your comments and getting all of your opinion on the property market and where you think it's going. So, I am glad to be back. But the burning question, where have I been? Well, I can't really say too much at the moment. However, what I can say is that it involves two properties, a buy-to-let and a residential. So, there will be more to come on those, and you will see a video coming very soon revealing my very first buy-to-let property investment. But for now, I reckon we should crack on with this video. Before we do, I would really appreciate it if you could all subscribe to the channel. Apparently, every time someone watches one of my videos and does not subscribe to the channel, the Bank of England raises interest rates. So come on, let's put a stop to the interest rate rises and subscribe to the channel. Perfect. Now that that is done, let's get into the video. So a lot has happened since I last made a video. We've had more rate increases, more landlords selling their properties, rental prices increasing, and the property market has essentially just come to a complete standstill. Now, property prices have not crashed as many have expected. However, transactions have. Analysis of the Land Registry data for the first 5 months of this year by agency brand Barrows and Forrester found that 147,223 homes sold across England and Wales for an estimated £52.5 billion in total. This marks both a 54% drop in transactions and a 57% reduction in a total market value of homes sold when compared to the 5 months prior. Why? This is mainly a supply and demand issue. There is just not enough supply to have a meaningful impact on prices, and rates just feel too high for most people. As we sit here today, the average UK house price, according to the official figures, is £288,000, £5,000 higher than 12 months ago, but £5,000 below the peak of November last year. And London was actually the only region where property prices fell in the last 12 months, marking the first time prices have fallen in the capital since before the pandemic in November 2019. Let's be honest, it's hardly surprising that prices are falling in London. The London market has been ridiculous for a long time, especially given the state of the capital. Now, is the rest of the UK set to follow suit? Well, according to Sarah Coles, head of personal finance at Hargreaves Lansdown, we might just be, stating, London is setting a fashionable trend that the rest of the UK may be doomed to follow. Why? Well, mortgage rates. The average 2-year fixed rate residential mortgage currently stands at between 5.5 and 6.5%. Meaning, if you want to buy a property at £288,000, the average price right now, putting down 10%, you will be looking at a monthly payment of £1,600. Now, I don't know about you, but that feels a little bit steep to me, especially considering the average UK salary is only £33,000. We also have rent prices hitting record highs both inside and outside of London. Data from Rightmove shows tenants outside of London are being asked to pay an average of £1,231 per month, with properties inside London reaching a record of £2,567. To make matters worse, there are reports that landlords are selling up in droves despite the increase in rental values. Estimates by estate agent Savills show that 25,000 homes in the UK were sold by landlords between April and May, compared with 22,000 in the previous 2 months. So, why are landlords selling? Well, there's multiple reasons. Over the last few years, the landlords have been hit pretty hard with higher mortgage interest rates, the end of the interest rate relief, which actually reduced profitability to its lowest level since 2007, the Renters Reform Bill, and new EPC legislation. Now, I'm not saying that all of these things are bad. That being said, most landlords are selling up because of government intervention in what should essentially be a free market. Now, something that I hear a lot is great. that means more properties for first-time buyers. But that's just not the case. Property prices are not falling, even with the increased number of landlords selling and higher rates. What is happening though is that first-time buyers who are renting are paying more rent due to the reduced supply of available rental properties, meaning they have less money to then save to then buy their first property. It's a lose-lose for everyone involved. Finally, I want to touch on interest rates. The latest rise in August took the base rate from 5 to 5.2%, its highest level since the 2008 financial crisis. This is despite the fact that inflation has been on the decline. Now, experts believe that the base rate will peak around about 5.75% in spring of 2024 before finally falling just below 4% over the next 5 years. That's probably not what most people wanted to hear, but historically speaking, 4% is still an incredibly low rate, although it might not feel like it. Now, I tend to agree with the experts on their timeline for rates to come down. However, I fundamentally disagree with their decision to continue raising rates. Inflation is coming down, and if you look at the root cause of inflation, it stemmed from supply chain issues. And continuing to raise rates doesn't fix the root cause of the issue. Economists across the world are starting to realise this, that raising rates is not the silver bullet they hoped for. It worked in the late 1970s because the root cause was something completely different to what caused the latest round of inflation. It's like going to the dentist and getting a filling, but continuing not to brush your teeth and drinking nothing but Coke. You're not fixing the root cause of the issue. In all honesty, I'm fully expecting rates to stay pretty much where they are for a while. Personally, I think 5 years to see 4% is about right. Well guys, that is all from me. I hope you found this video useful. If you did, please subscribe to the channel, give it a like and give it a share. I really do love making these videos for you all, and I'm really excited to share my first buy-to-let property investment. So make sure you subscribe to the channel to see that, give you a full rundown of the numbers and everything. But for now, stay safe.